Hello, good afternoon traders. It's AJDayTradr here and I hope you're enjoying your weekends in the sun. Today I'm going to go through how I use technical indicators and techniques in order to gain a little bit of an edge in the market. There's a lot of debate in the trading community whether fundamental or technical trading is more successful, and I lean towards technical. If I had to put a percentage on it, I would say I was 75 to 80% technical and 20 to 25% fundamental. For this video, I'm going to start with the blank chart of a Euro US dollar daily time frame, and I'm going to add my individual analysis techniques one by one until I have the full picture that I use in the daily analysis videos every morning. So the first thing that traders do when they're looking at a new chart is they're going to add the levels of recent support and resistance that they're looking for support and for future support and resistance. So I'm just going to quickly add in mine. So I'm not too scientific about it. I look for sort of more recent and more significant levels, and if I just take a few here, I try to get not too many. This is a perfectly significant amount, sort of 5 or 6 on the chart. I think this gives us a lot of room for maneuvering and gives us a good idea of where the market's likely to reject. So these moving on from levels, I put a huge emphasis on trend lines. It forms a very important part of my trade plan. Whether they hold or break gives me a huge perspective of whether the likely direction of the market's going to continue or retrace. Again, drawing them isn't too scientific. I just connect the wicks on most occasions. However, on some occasions, for example, this candle here, I will ignore due to it being such a significant candle on the daily time frame. I believe that was the Trump being elected, the market reaction to that. So I ignore that for that purpose. I don't think it gives you significant data, just the market sort of panicking or being greedy at that point. So now I've got a couple trend lines in, we're starting to build a better picture of where the market's gonna retrace and good targets to aim for. So moving on, I do add EMAs, and the EMAs I've chosen are Fibonacci EMAs, so 8, 21, 50, and 200. I use EMAs not particularly to enter or exit trades, but to help establish the trends in the market. So I look for their gradient, if they're upward or downward facing, the order they are in. For example, if they're nicely fanning where the 200, the 8, the 50, and the 21, sorry, I got those the wrong way, but I look for them to be in the correct order, and that's a strong indication that the trend has got a significant momentum to it. And just to clarify, the darker the shade of purple, the longer the time frame. So the darkest here is 200, followed by the second darkest, which is 50, and then 21, and then 8 is almost white. And the last thing I look for is if they're bunched up. That's a good signal that the market is in a range and it's waiting for a breakout in either direction. And this is quite a good example. All the EMAs are quite close together and don't really have a significant direction. However, the 8 is showing the momentum, the bearish momentum we've had in the last couple of days. So one thing I do look for in the EMA is a significant EMA where the price action has rejected off. And I'm just looking here, it looks like the 200 EMA has been significant on a number of occasions. I'll just box them in with rectangles. We can see the rejections off the 200 EMA. So as you can see on, 5 or 6 times in recent price action, the price has gone up towards the EMA and rejected strongly off of it. This is a good signal that next time it comes up to the EMA, it could well reject off it. It could be a rejection zone. If you can add that to a confluence of other techniques, you're starting to build a high probability opportunity. So sometimes the market seems to reject in between these EMAs. For example, if it's rejecting between the 50 and the 200, I will try out a custom EMA, it's called, where I try maybe the 100, 120, and if that fits the market better, I will include that instead of the traditional EMAs. So the next thing I look at is probably my biggest analysis technique, and that is the Fibonacci. The indicator I use was developed by Andy Demi, who has mentored me for some time now. I will link the London Trading Group, which is Andy Demi's company, in the description, and if you'd like to learn more about the Fibonacci, that's a great place to do so. I'm not going to go too much into the details of it, but essentially it's the theory that the markets go up and down in Fibonacci waves, that a trend starts by an initial move of, to keep the numbers simple, let's say 100 pips. At that point, the market is likely to go down by a Fibonacci number, so 61.8% is a Fibonacci number, and so that's 61 pips, and then it's likely to continue up by 100 pips. So it's a sort of 2 steps up, 1 step down theory. And I'm going to show you here on just a chart that I've randomly selected, the EURUSD daily chart. I'm going to show the significance of the data here. So if we take, for example, most recently, here we have the initial move was AB here. We have rejected, gone towards the 61, didn't quite get there, but we almost did. If we'd entered in here and made our target the 1618, 161.8 even, you would see that we would have almost taken the whole move, and with the confluence of it being on a trend line, here would have been a great profit take area. And it does seem that we're not the only ones that thought that. Maybe the institutions are in on it, and the market has dropped off significantly since. So we're seeing the power of the confluence of the two, the Fibonacci target and the trend line coming into play there. So the next technique, which is also a London Trading Group technique, again, description in the link in the description, is the daily trading range. This isn't a unique to London Trading Group, but the indicator I use is Andy Demi's as well. So we can see that it gives a range, a price range of the market, and 50% of the time the price will stay within these two. The price will close even between these two lines. I've colored them turquoise and purple. So I use this in order to not get into a trade that has maybe overextended on the day, and I'll wait for a retracement in order to get a better price for that. For example, if by 10 a.m. in the morning we're already looking at a 1.5 times DTR price, you're not going to get the value for money by entering in the trend at that point, because we're likely that we're probably going to retrace a bit and close on the day at a level that's within the DTR. So the numbers on the multiples are, if you use a 1 DTR, that's the price will 50% of the time close within this range. If you're using a 1.5, it's 25% of the time. So you can keep going up. I mean, there's a 2 and a 3. Those are less useful, but a 3 would probably be, almost 100% of the time we close within, and you can't see any candles that have closed outside of this price action. So the final three indicators all come sort of within the same criteria, and that's deciding whether the move has got one more push in it, one more completed Fibonacci wave up on the smaller time frames. And in order to do that, I use the MACD and RSI together. I look for divergence on the MACD. There are plenty of ways to use it, but I use the indicator to decide whether the trend has one more Fibonacci wave in it. Significant divergence would indicate that this is less likely. For example, we've had 2 or 3 moves up in price action, but if I could just box this price action here and this MACD here. So we've had a spike here. This is the relative high. However, we've continued up in price action, but we've come off in MACD. That's a strong signal for me that the market is starting to fail at the price level that we're getting to, and that maybe a long at that point isn't the best idea. Also with RSI, if we're starting to approach the overbought or oversold area, that's a signal that the market has become stretched, and just like an elastic band, it's likely to rebound in the future, and you wouldn't want to be caught in a trend position at that point. Maybe you're looking for reversal positions. So the last analysis technique I'm going to use today is the stochastic. It's one that I don't use that often, but when the market is ranging, like it has been on the daily in the Euro USD, which I will show you once I've just cleaned up this. I like to mark out the range boundaries in green. I think they're the most significant boundaries. So if we can just zoom in on this price action for the last sort of 9 months on the daily, we can see that actually the price hasn't escaped 1.0870 and 1.0350. We're kind of stuck within this range, in a range, and the stochastic does follow that by sort of every time the stochastic gets up into the overbought or oversold areas, we're looking at a crossing back into the normal price action, and we're looking at a sell-off until we get into the oversold, and then we're looking at a buying price action. So this is typical for a range trade, and we're looking for a confluence between several different analysis techniques that I've already spoke about. And for example, in my recent videos, I've been talking about 1.09 being very significant in the Euro USD. That's up here. The reason why I chose this level was because of the confluence of the Fibonacci D, the stochastic being overbought, and the trend line coming into play. And that gave me a really high probability chance that the euro was going to weaken. Even though we'd had sort of several weeks of bullish price action, I thought it's not going to continue, and we're likely to come off, and we did. And that's provided a high probability trade, and that's the sort of thing you've got to be looking for in order to succeed long term in the industry. So thanks a lot, guys. I hope this was useful. If you've got any questions or you use the analysis indicators differently, please do feel free to make some comments. It'd be good to get a discussion going in the comment section on YouTube. And like and subscribe for daily content. I will be releasing a video today on the longer time frames. We just had a new monthly bar, and I'll be discussing where sort of longer term I feel that the currencies are going to go. So thanks for tuning in. I hope you enjoyed it. Like and subscribe, and I will speak to you next week. Thanks, guys. Bye.